Well, this morning, ET Now caught up with the management of IDBI Bank and had a detailed discussion about what exactly the road ahead holds for them in terms of their credit growth, their current asset quality, and of course all the recent fundraising that's been concluded by them. Now, just to bring you up to speed with what's happened up till now, they've recently completed a 1,435 crore QIP. Now, the QIP was structured as a 1,000 crore issue plus a 1,000 crore green shoe. So while it is not discouraging that they did not complete the full 2,000 crore, certain investors were curious as to why money might have been not taken off the table if the option was available to do so. So that's the first question. It was done at 38 rupees per share. Now what's happened is, post this QIP, LIC, who is the majority promoter of this bank, has seen its shareholding drop to lower than 51%, which is the regulatory norm that they're allowed to keep it at. So now what might happen is they also have the option to raise an additional 1,500 crore from LIC in order to bolster the balance sheet. And at the same time, that wouldn't be breaching any regulatory norms because that dilution has already occurred. So that's also a good safety net for IDBI, that in the event of a rude asset quality shock or in the event of a significant growth opportunity, they now not have just 1,435, but actually they can quickly raise 1,500 crore more. So it actually gives the bank 3,000 crores of liquidity that they can push forward. Apart from this, there's also a lot of recoveries that are currently in the works. So while the management stressed that NCLT has been a bit of a slow, cumbersome process, they should be able to recover 5,000 crore, which is the target they had set for this fiscal, and that should be happening with around a 3,000 crore recovery nearly in H2 of this year. So that's another important feature to keep your eyes out on. The next thing they spoke about is that there's not been a lot of new investment in India lately this year on the MSME side. So really, agriculture, mortgage and gold loans are the three areas where the bank can really hope to grow aggressively. With mortgage rates being very low, they will be focusing on that. They've also dropped their mortgage rate recently to be a little more competitive with what the private banks are doing, for example. Gold loan has been showing very good traction. And then as the economy tends to open up more and more, they expect credit growth to even come back into segments like the MSME and industrial segment. So credit growth for this year, management said holistically, for the whole loan book, which currently stands at around 1.63 trillion rupees, you can expect around an 8 to 10% advances growth for the rest of this year, and then a similar growth rate for FY22 as well. Coming to asset quality, the management stressed that the worst is behind us. The PCR is very high at 96%. Whatever needed to be provided for, majority has been. So from here on, there should be no more rude shocks. Things should only look up. It's simply a matter of growing the right avenues and really the economic and demand revival making a comeback, and then this PSU should be set to take off again. It's done quite okay in trade recently, as have the bulk of PSU banks. They've all also been raising capital. A bit late in the day, some might say, but nonetheless it's happening. So keep your eyes out on this stock. Maybe pegged to do slightly better on from here on out.